my name's Craig Erlam, Senior Market Analyst at OANDA. Today we're going to talk about the pound versus the US dollar, otherwise known as cable. Now, of course, there's plenty of news around these two countries right now, so it's no surprise to see that we are seeing excessive levels of volatility. I'll start over here in the UK, where we are just about to see the announcement of the new UK Prime Minister, Boris Johnson. He will then deliver his speech, go and visit the Queen before he is officially unveiled. Now, what's going to be interesting now going forward is going to be his Brexit strategy. Of course, he has plenty more to be focused on, the situation in Iran right now and far more other issues. But Brexit is the reason why he has been voted in. So that's going to be his primary objective. It's now just over 3 months to the deadline. We need to see who's going to fill his cabinet. Is it going to be full of Brexiteers really trying to push this no-deal strategy? Or is he going to try and offer some form of balance? Is he going to engage in negotiations? And will he be successful? Now, of course, that is a lot to take in, but what we have to remember is the markets have already priced a lot in already. We have seen the pound on the decline since the middle of March, when it became clear that Theresa May wasn't going to get her deal over the line. And since then, we have just been edging lower and lower, and that was because Boris Johnson was the clear front runner straight from the word go. It was clear that he was going to be in the final two, and then it became very clear that he was the favoured member, favoured of the final two amongst the Tory membership. And so, as I say, during that time, the pound has been going lower and lower, effectively pricing in the increased possibility of a no-deal Brexit with Johnson clearly favouring it more so than Jeremy Hunt. Of course, the difficulty is always going to be getting that through Parliament when Parliament is so strongly against it. Now, while we are seeing this being priced in, what is interesting is that when he was announced yesterday, the pound didn't really drop off. In fact, we actually saw it pair those initial losses, and we've seen it trading up slightly now on the day. That suggests to me that he was effectively priced into the market. So the question now is, how much further do we go, if at all lower? Well, I think the momentum indicator is potentially key here, because on the recent dips, they have actually been not confirming the move, in that they've been creating a divergence. As price action has made lower lows, they've been making higher lows. Again, that suggests that this trend has very much weakened around those 123, 124 levels, which is where we currently find ourselves. We're now pushing 125. We're not really gathering too much upward momentum, but we are also still not seeing too much downside momentum build on what we've seen over the last few weeks. The other factor in this, of course, is the US dollar. All attention now on that Fed meeting next week. And one thing that could potentially play into a little bit of dollar weakness here, which could potentially help propel this currency pair off these lows through the 125s and above, is the fact that markets are very aggressively pricing interest rate cuts at the moment. Not just rate cuts between now and the end of the year, which I still think is very aggressive, but even at this point, they're still pricing in an almost 25% chance of a 50 basis point rate cut. Now, this comes from the CME Fed Watch tool, which you can see on the screen right now. This takes Fed funds futures and it produces probabilities of interest rate movements based upon the movements which we are seeing in the markets. And as you can see, almost 25% chance of a 50 basis point rate cut. This is despite the fact that we saw the New York Fed President John Williams' comments clarified last week when he suggested preemptive policy. They wanted to make sure people were aware that this was no reference to the current meeting, and even the most dovish member of the policy committee who is voting this year, James Bullard, said on Friday that he actually favoured a 25 basis point cut rather than a 50 basis point cut. None of this points to aggressive rate cuts at this meeting. We are highly likely to see 125 basis point, but clearly the markets do look a little offside at this point. So if the Fed does disappoint in any way and doesn't strongly signal more future rate cuts to come, then this is something that could potentially weigh on the dollar a little bit, because quite clearly the market is not quite positioned correctly at this moment in time. But what's really important here is the market clearly wants more additional rate cuts. So while we may see an initial spike higher in the dollar, whether it lasts will depend on whether markets really take to it. And previously, the market has not taken to the Fed's warnings and is instead followed its own path, but insisting that more interest rates are coming and effectively pushing the Fed into the corner in order to deliver as they were expected to this time next week.